Hello, Mr. Bernard. I am Chayin here. Today, I will be present my findings on this management accounting assignment. Firstly, on the 5-yearly income and expenditure forecast based on existing operation condition of Tulip Berhad. For the sales of Tulip Berhad since 2016 to 2020 increased by 1,000 year by year. The total sales since 2018 is 23 million, following by 24 million on 2019 and 26 million on 2020. Second is the 5-yearly income and expenditure forecast based on the Chief Operation Officer proposal. The newly appointed Chief Operation wants to expand the business through investment in new advanced equipment and widen the business market through setting up a new outlet at East Malaysia. The total sales from 2018 increased year by year to 2020, and all the production also increasing every year. Thirdly is the computation of yearly effective yield rate. Assess the yearly effective yield rate in the investment of the new advanced equipment EAR can be used to evaluate interest payable on a loan or any debt and to access earnings from an investment of the new advanced equipment Anno 2016. The effective annual interest rate compared to the annual percentage rate, which is based on simple interest formula. The state annual interest rate and the effective interest rate can be significantly different due to compounding. And then continue by the 10 matters to be considered in order to evaluate the proposal to invest in the new advanced equipment. The time value of money. Recall that an equilibrium interest rate is set by the interaction of lenders with borrowers. It is only worthwhile to borrow in the return on the loan reaches the expense of the fund lent. Lending is only worthwhile if the return is at least equal to that can be earned in the same risk class from alternative opportunities. And the second one is the timing of cash flow. And the third one is the horizon problem. And the fourth is the payback period. The fifth one is the accounting rate of return. And the sixth is allowing for inflation. 7 is the net present value. And the number 8 is internal rate of return. And number 9 is net present value. And number 10 lastly is net cash flow. And then now we're going to say about the factors can be considered in developing and managing budget. The first one is the economic situation. The second one is inflationary indicator. The third one is new macroeconomic perception. And the fourth is budgetary control. And the last one is proper training. What is the alternative methods in financing the acquisition of the new advanced equipment? The first one is acquisition via debt, and another one is acquisition via equity. And lastly, now is the conclusion of the overall assignment. In conclusion, management accounting ensures that the process of transfer from inputs through the manufacturing process to result is feasible and plays a primary role in decision making by management. Accounting management in the method of defining, evaluating, gathering, reviewing, planning, interpreting, and sharing information that helps manager achieve organizational goals. In addition to prepare the budget, investigate the challenge in budget preparation, and to determine what can be done enhance budget preparation. Both descriptive and inferential statistics was used to determine the relationship between variables. Thank you. This is my management accounting presentation.